Hello, friends. Let's start with today's session. On the last occasion, we have discussed certain circulars which was pertaining to Section 9 of the Act. Now, there were a few more circulars which were yet to be covered. So, we'll be starting with those circulars today. 27th of January 2018. No, it's 4th January 2018, and circular number is 27 of 2018. The way it was written, I felt it is date, but it is circular number 27. Let's see what it is. Now, this is the circular on your screen. Clarifications regarding levy of GST on accommodation services, betting and gambling and casinos, horse racing, admission to cinema, homestays, printing, legal services, etc. So these are certain services which are being clarified. The clarifications are sought for by the trade or the associations, and it is being clarified now by virtue of this particular circular, which is circular number 27 of 2018. And let's see one by one. So the first serial number, it has multiple questions. So first, will GST be discharged on actual tariff or declared tariff for accommodation services? There was a provision in the tariff which said that if the tariff exceeds this much of the amount, then the rate will be 28%. If it does not exceed and it is falling within this bracket, then the rate will be 18%. So the question is whether actual tariff or the declared tariff for accommodation services, which will be the tariff on which the GST has to be charged. See, for determination of the rate of tax which is applicable, this is one thing. And the applicability of GST is another thing, because we have dealt with and we have tried to understand that in GST, the transaction value is the value on which the GST has to be paid. So say, for example, if my declared tariff is, let's say, 8,000 rupees, and after discount, it comes to 6,000 rupees or 5,000 rupees, less than 7,500. In that case, the question arises whether the GST rate of applicability would be 28%. And if yes, then what will be the value on which the tax has to be paid? Whether it is to be paid on the 8,000 rupees, which is the declared tariff, or it has to be paid on the 6,000 rupees, which is the amount which is actually being collected for these services. So the answer is declared or published tariff is relevant only for determination of the tax rate slab. GST will be payable on the actual amount charged, that is the transaction value, because the concept of GST is very clear. Section 15 of the law is very clear that it has to be charged on the transaction value. So therefore, if the transaction value is given, if it is less than the declared tariff, maybe some discounts or maybe some other benefits are given, then in that case, it is very clear that whatever is the actual transaction value, only on that the tax has to be paid. But for determination of the rate of tax which is applicable, declared tariff will be relevant. So therefore, if I am declaring a tariff of, let's say, 8,000 rupees for a particular accommodation service, then in that case, the rate will be applicable, which is for higher than 7,500, which is 28%. So that will be the rate which will be applicable. But the tax has to be paid on the basis of actual amount which is being collected for the services being given. Next is, what will be the GST rate if cost goes up more than declared tariff owing to additional bed? So what is happening is, you have a tariff of, let's say, 7,000 rupees, and then an additional bed has been taken, which is having the cost of 1,500 rupees. So total will be 8,500 rupees. Applicability of tax on the actual value, okay. But what will be the rate which will be applicable? Whether it is going to be falling within the bracket of 5,000 to 7,500, that is less than 7,500 because the declared tariff is 7,000, or it is going to be the rate which is applicable to 7,500 plus, which is the actual tariff which is being collected. So the answer is, GST rate would be determined according to the declared tariff for the room. So therefore, declared tariff is 7,000 rupees. So it will be accordingly declared that what will be the GST rate that will be applicable. And GST at the rate so determined would be levied on the entire amount charged from the customer. For example, if the declared tariff is rupees 7,000 per unit per day, but the amount charged from the customer on account of extra bed is 8,000 rupees, GST rate shall be 18% only. It will not be 28%, saying that since the amount has crossed 7,500, therefore you are liable to pay tax on 7,000 at the rate of 28%. That will not be the case. So therefore, what we conclude here is, when we have to calculate, when we'll have to identify or rather determine which rate is applicable, in that case, it's very clear that the declared tariff plays the role. But when it comes to on what value the tax has to be paid, then the actual amount which is being collected on that, the tax will have to be paid. Next is, where will the declared tariff be published? So question is, you are talking about declared tariff for the purpose of determination of the rate of tax that is applicable in that particular service. But is there any particular specified place where the declared tariff has to be published or not? So therefore it is said that it can be published anywhere but made public. So tariff declared anywhere, say on the websites through which business is being procured, or printed on tariff card, or displayed at the reception, will be declared tariff. In case different tariff is declared at different places, highest of such declared tariff shall be declared tariff for the purpose of levy of GST. You have, let's say, 4 places, and at each of those 4 places there are different tariffs which are published. So the highest of those published tariffs will be applicable for the purpose of determination of the rate of tax which will be applicable. Next, same room may have different tariff at different times, depending on season or flow of tourists as per dynamic pricing. What rate to be used then? So therefore, say for example, in season, the rate of the declared tariff becomes 10,000 rupees, but in off season, the declared tariff becomes 6,000 rupees. So what will be the rate? Whether 28% will be applicable all the times, or when the declared tariff is 10,000 rupees, it will be 28%. And when it is 6,000 rupees, the declared tariff will be 18%. That is the question. Let's see what is the answer. In case different tariff is declared for different seasons or period of the year, the tariff declared for the season in which the service of accommodation is provided shall apply. So therefore, in my example, for the season period, when 10,000 is the declared tariff, 28% will be the rate. And when off season, when the declared tariff is 6,000 rupees less than 7,500, then the rate will be 18%. So the services, when it is being provided at that point in time, what is the declared tariff? That will be the determining factor for the rate of tax applicable. Next is, if tariff changes between booking and the actual usage, what rate will be used? Say, for example, at the time of booking, the tariff is 7,000. And when you are going to use that actual usage, when it is there, it comes to 9,000 rupees declared tariff. So which will be the declared tariff that will be used, whether at the time of booking or at the time of usage? Let's see the answer. Declared tariff at the time of supply would apply. So therefore, merely booking in 2 months advance for a season period where the tariff or declared tariff is bound to increase will not help you for being taxed at a lower rate. So therefore, whatever rate, whatever declared tariff will be there at the time of actual usage of that particular accommodation service, that will be the value, that will be the declared value on which the tax determination will happen, or the rate of tax will be determined. Last question in this is, GST at what rate would be levied if an upgrade is provided to the customer at a lower rate? So therefore, there is a service of upgradation. So you have booked a room which is 5,000 rupees declared tariff, comes into 18%, but it has been upgraded to a suite, and that uh, declared tariff for that particular accommodation, which is the upgraded accommodation, let's say is 10,000 rupees. So the value changes and the rate of tax also changes. So what will be the rate of tax which will be applicable? If declared tariff on the accommodation provided by way of upgrade is 10,000 rupees, but amount charge is 7,000 rupees, then GST would be levied on at the rate of 28% on 7,000 rupees. So whatever is the actual collection, tax will be leviable on that, but the rate will be applicable, which is applicable to the declared tariff on the upgraded accommodation. Next is Wide Notification 11/2017, Central Tax Rate dated 28th June 2017, entry number 34. GST on service of admission into casino under heading 9996, recreational, cultural and sporting services has been levied at the rate of 28%. Since the value of supply rule has not specified the value of determining taxable amount in casino, casino operators have been informed to collect 28% GST on gross amount collected as admission charge or entry fee. The method of levy adopted needs to be clarified. So what will be the rate that has to be made applicable? It needs some clarification. So relevant entry at serial number 34 is as under. Now gambling 14%. As it is evident from the notification, entry to casinos and gambling are two different services, and GST is leviable at 28% on both these services on the value determined as per section 15 of the CGST Act. Therefore, GST at the rate of 28% would apply on entry to casinos as well as on betting gambling services being provided by casinos on the transaction value of betting. That is the total bet value in addition to GST levy on any other services being provided by the casinos, such as services by way of supply of food, drinks, etc. at the casinos. Betting in pre-GST regime was subjected to betting tax on full bet value. So now it is very clear that when the admission is there and the additional services are being given by the casino, all those services will fall within one rate, which is 28%. Next, the provision in rate schedule, notification number 11 of 2017, dated so and so, does not clearly state the tax base to levy GST on horse racing. It does not clearly state the tax base to levy GST on the horse racing. So therefore, clarification is sought. The answer is GST will be levied on entire bet value, that is total of face value of any or all bets paid into the totalizer or placed with licensed bookmakers, as the case may be. So it has to be on the entire bet value. Illustration is, if entire bet value is 100 rupees, GST leviable is 28 rupees. Next question is whether for the purpose of entries at serial number 34, clause 2, which is admission to cinema, and 7268 accommodation to hotel in etc. of the notification 11 by 2017, price or declared tariff includes the tax component or not. So therefore, if I say 7,000 rupees, 7,500 inclusive of taxes, does it mean that 28% will be applicable because the declared tariff is 78 is 7,500 plus, or we'll have to reduce the tax and then determine the amount which is applicable or the rate which is applicable. So it says price declared tariff does not include the taxes. So it is the basic amount which do not include any tax. Second, whether room rent of rooms provided to inpatients is exempt. If liable to tax, please mention the entry in GST notification number 11 by 2017. Room rent in hospitals is exempt. For inpatients, all the room rents are exempt. Third, what will be the rate of tax for bakery items supplied where heating place is attached? Manufacturer for the purpose of composition levy. So therefore, if there is a bakery wherein they have a separate place also, wherein you can sit and eat, what will be the rate of tax which is applicable to the bakery items? So it says any service by way of serving of food or drinks, including by way of a bakery, qualifies under section 10(1)(b) of the CGST Act, and hence GST rate of composition levy for the same would be 5%. 5% will be the rate which will be applicable. Next is whether homestays providing accommodation through an electronic commerce operator below threshold limit are exempt from taking registration. Homestays providing accommodation. So person who is providing accommodation of homestays, which is through an electronic commerce operator. There are a lot of electronic commerce operators who are dealing into that. So if that is below the threshold, are they exempt from taking registration? It is very clear that they cannot be exempt. So notification number 17 by 2017 has been issued, making electronic commerce operators liable for payment of GST in case of accommodation services provided in hotels, in guest houses, or other commercial places meant for residential or lodging purposes provided by a person having turnover below 20 lakhs per annum and thus not required to take registration under 22(1). Such persons, even though they provide services through electronic commerce operator, are not required to take registration in view of section 24 clause 9 of the CGST Act. So they are now clarifying that they have already issued a notification which has specified that electronic commerce operator will be liable for payment of GST in case of the accommodation services which are provided in hotels, in guest houses, or other commercial places, which is meant for residential or lodging purposes. But if a person is having a turnover below 20 lakhs, which is the threshold, then in that case, he is not supposed to take registration. Although it is an electronic commerce operator, which is included in section 24, clause 9, but then also the notification has exempted it and therefore no requirement to take registration. Next is to clarify whether supply in the situations listed below shall be treated as a supply of goods or supply of service. So there is a confusion, and this confusion is still persisting, that whether a particular supply, first and foremost, it is to be classified as supply. So therefore it falls within the purview of supply. The question is whether it is going to be a supply of goods or it is a supply of service. One, the books are printed, published, sold on procuring copyright from the author or his legal heir. So a person who is having the right to print, publish, or sell, wherein he is procuring the copyright from the author or his legal heir, what will be the applicability? Second, the books are printed, published, sold against a specific brand name. So if there is a specific brand name that like Manorama yearbook, so it's a brand name. So if it is printed and published or sold within this brand name, what will be the GST applicability? The books are printed, published, sold on paying copyright fees to a foreign publisher for publishing Indian edition, same language of foreign books. So it is published in Indian language, same book, but in different language. Example, Penguin India Limited pays fees to Routledge, London. The books are printed, published, sold on paying copyright fees to a foreign publisher for publishing Indian language edition translated. Example, Ananda Publishers Limited pay fees to Penguin, New York. So if they are paying any fees to a foreign publisher, then what will be the applicability of GST into that? It says the supply of books shall be treated as supply of goods. As long as supplier owns the books and has the legal rights to sell those books on his own account. So if I'm publishing, I'm printing, and then I'm supplying those books or selling those books, then in that case, it will be treated as supply of goods. That was the only question, that whether it is to be treated as supply of goods or services. So therefore, the answer is, as per this explanation is, or clarification is, goods. Next, whether legal services other than representational services provided by an individual advocate or a senior advocate to a business entity are liable for GST under reverse charge mechanism. So a legal charge which is other than a representational service, maybe drafting of an agreement or anything else. So whether the RCM will be applicable, the answer is yes. In case of legal services, including representational services provided by an advocate, including a senior advocate to a business entity, GST is required to be paid by the recipient of the service under reverse charge, that is the business entity. So it is now very clear that RCM will be applicable in all those cases. Now, this was circular number 27. Moving further to the original this thing. Next is circular number 28 of 2018. So it says clarifications with regards to GST on college hostel mess fees. Let me open the file and share it for the purpose of the file is on your screen. Circular number 28, dated 8th January 2018. Clarification regarding GST on college hostel mess fees. So, starting for para 2 only. The educational institutions have mess facility for providing food to their students and staff. Such facility is either run by the institution or students themselves, or is outsourced to a third person. Supply of food or drink provided by a mess or canteen is taxable at the rate of 5% without input tax credit. Serial number 7, clause 1 of notification 11/2017, as amended by notification 46/2017. It is immaterial whether the service is provided by the educational institution itself or the institutions outsources the activity to an outside contractor. So therefore, irrespective of whether the educational institution is providing these mess services or institution has outsourced out contractor and he is providing those services, it is immaterial, and therefore the rate applicable is 5% in both the cases. That is what is the clarification given by the board. Moving back to now, next is 29/2018. Let's see what it is saying. Now, is there on your screen 29/2018. It is clarification regarding applicability of GST on polybutylene feedstock and liquefied petroleum gas retained for the manufacture of polyisobutylene and propylene or D-butyl paracresol regarding. So therefore, the applicability of GST has been clarified on these products. Para 2, I'll be starting with. In this context, the manufacturers of propylene or D-butyl paracresol or polyisobutylene have stated that principal raw material for manufacture of such goods are liquefied petroleum gas and polybutylene feedstock respectively. So these are two things for two products. Propylene or D-butyl paracresol के लिए it is liquefied petroleum gas, and polyisobutylene के लिए it is polybutylene feedstock. These are the products which are there respectively as a raw material, which are supplied by oil refineries to them on a continuous basis through dedicated pipelines, while a portion of the raw material is retained by these manufacturers. The remaining quantity is returned to the oil refinery. So therefore, there is some quantity which is being retained and rest of the quantity is being returned back. In this regard, an issue has arisen as to whether in this transaction GST would be leviable on the whole quantity of the principal raw materials supplied by the oil refinery, or the net quantity retained by the manufacturers of propylene or dibutyl paracrysol or polyisobutylene. Friends, you might remember that on the last occasion we have discussed a similar kind of thing, wherein it was supplied through a mode, and then some portion was retained, and the rest was returned back. So the law at that point in time, or the clarification at that point in time we have read, is that whatever is being retained, that will be only treated as supply and the GST will be applicable only on this. Let's see what the board says for this particular transaction. The GST Council in its 25th meeting held on 18th of January 2018 discussed this issue and recommended for issuance of a clarification stating that in these transactions, GST will be payable by the refinery on value of net quantity of polybutylene feedstock and liquefied petroleum gas retained for the manufacture of polyisobutylene and propylene or dibutyl paracrysol. So therefore, it's same that whatever is retained, that net quantity will be the quantity which will be deemed to be supplied, and therefore tax will be applicable on that. Accordingly, it is hereby clarified that in the aforesaid cases, GST will be payable by the refinery only on the net quantity of polybutylene feedstock or liquefied petroleum gas retained by the manufacturers for the manufacture of polyisobutylene and propylene or dibutyl paracrysol. Though the refinery would be liable to pay GST on such returned quantity of polybutylene feedstock and liquefied petroleum gas when the same is supplied by it to any other person. This is exactly what has been clarified in that particular case also. So now going to the next 30/2018. Let's see what is being clarified in this notification, in this circular. Very screen. It's clarification on supplies made to the Indian Railways classifiable under chapter other than chapter 86. So all those supplies which are being made in any chapter other than chapter 86, the clarification is given in this circular. It says representations have been received that certain suppliers are making supplies to the railways of items classifiable under chapter other than 86, charging the rate of 5% of GST. The matter has been examined. Wide notification 1/2017 dated so and so, read with notification 5/2017 dated so and so. Goods classifiable under chapter 86 are subjected to 5% of GST rate with no refund of unutilized input tax credit. Goods classifiable in any other chapter attracts the applicable GST as specified under notification 1/2017 or notification 2/2017. So therefore, 5% is only in case of chapter 86 items, and for rest of the items, it is clearly specified that the rate which is applicable to that particular item in 1/2017 or 2/2017 will be applicable. So the GST Council, during its 25th meeting held on 18th January 2018, discussed this issue and recorded that a clarification regarding applicable GST rates on various supplies made to the Indian Railways may be issued. So accordingly, it is hereby clarified that only the goods classified under chapter 86 supplied to the railways attract 5% GST rate with no refund of unutilized input tax credit. This is very clear. Chapter 86. Other goods falling in any other chapter would attract the general applicable GST rate to such goods other under the aforesaid notification, even if supplied to the railway. So therefore, that will not be including the rate of 5%. It will be as per the general rate which is applicable in that respective tariff for the respective item. I don't think we'll be able to cover the circular because there are too many circulars in this section. Anyways, next is 32 of 2018. Let me just open it up. It's again a big circular. There on the screen. It says clarification regarding GST in respect of certain services. It is 32 of 2018, dated 12th February 2018. 1. Is hostel accommodation provided by trust to students covered within the definition of charitable activities and thus exempt under serial number 1 of notification 12/2017. Hostel accommodation by a trust to students, whether charitable. Hostel accommodation services do not fall within the ambit of charitable activities as defined in para 2 clause R of notification 12/2017. However, services by a hotel, inn, guest house, club or campsite by whatever name called for residential or lodging purposes having declared tariff of a unit of accommodation below 1000 rupees per day or equivalent are exempt. Thus, accommodation service in hostels, including by trust, having declared tariff below 1000 rupees per day is exempt. Now, this will not be applicable today because now it has been amended and this 1000 rupees limit has been done away with. So therefore, now there is no exemption limit for the lodging or guest house for an amount of declared tariff less than 1000 rupees. It is now not applicable. Next is GST leviable on the fee amount charged in the following situations. A customer pay fees while registering complaints to Consumer Disputes Redressal Commission Office and its subordinate offices. These fees are credited into State Customer Welfare Funds bank account. Whether GST will be applicable on this. Next is Consumer Disputes Redressal Commission Office and its subordinate offices charge penalty in cash when it is required. Next, when a person files an appeal to Consumers Dispute Redressal Commission against order of the district forum, amount equal to 50% of the total amount imposed by district forum or 25,000 rupees, whichever is less, is required to be paid. Now, what is the applicability of GST in these three situations? Services by any court or tribunal established under any law for the time being in force is neither supply of goods nor services. That is part of Schedule 3. Consumer Dispute Redressal Commission, national, state, or district may not be tribunals literally, as they may not have been set up directly under Article 323 capital B of the Constitution. However, they are clothed with the characteristics of a tribunal on account of the following. Statement of objects and reasons as mentioned in Consumer Protection Bill states that one of its objects is to provide speedy and simple redressal to consumer disputes, for which a quasi-judicial machinery is sought to be set up at district, state, and central levels. 2. The president of the district, state, National Dispute Redressal Commission is a person who has been or is qualified to be a district judge, high court judge, and Supreme Court judge respectively. So he will be the president. These commissions shall have been vested with powers of a civil court under CPC for issuing summons, enforcing attendance of defendants or witnesses, reception of evidence, discovery or production of documents, examination of witness, etc. So it's working like a civil court. Every proceeding in these commissions is deemed to be a judicial proceedings as per section 193 or 222, 228 of the IPC. The commissions have been deemed to be a civil court under CRPC. Appeals under district commissions lie to state commission, while appeals against the state commissions lie to national commission. Appeals against national commission lie to the Supreme Court. So in view of the aforesaid, it is hereby clarified that fees paid by litigants in Consumer Dispute Redressal Commission are not liable to GST, although it is not tribunal, but it is almost parallel to a tribunal. This is what is being explained and clarified. Any penalty imposed by or amount paid to these commissions will also do not attract GST. So therefore, any penalties or the amount which is paid to the commissioner, that also will not attract any GST liability. Next, whether the services of elephant or camel ride, rickshaw ride, and boat ride should be classified under heading 99964 as passenger transportation service. In which case, the rate of tax on such services will be 18% or under heading 9996 recreational, cultural, and sporting services, treating them as joy rides leviable to GST at the rate of 18%. So, elephant ride or camel ride or rickshaw ride or boat ride, can it be or should it be classified in 9964, which attracts 18%, or 9996, which attracts 28%? Let's see the answer. Elephant camel joy rides cannot be classified as transportation services. These services will attract GST at the rate of 18%, with threshold exemption being available to the small service providers. So therefore, 18% will be applicable. It cannot be classified as the transportation services. It is being clarified, but still the rate applicable would be 18%. Next, what is the GST rate applicable on rental services of self-propelled excess equipment, boom scissors, or telehandlers? The equipment is imported at a rate of 28% and leased further in India, where operator is supplied by the leasing company. Diesel for working of machinery is supplied by customer, and transportation cost, including loading and unloading, is also paid by the customer. So this is asking for the rate of GST which will be applicable. So it says leasing or rental services with or without operator for any purpose are taxed at the same rate of GST as applicable on supply of like goods involving transfer of title in goods. So therefore, leasing or rental services, whether it is with operator or without operator, for any purpose, it is always taxed at the same GST rate which is applicable on supply of the similar or the like goods. Therefore, the GST rate for the rental services in the given case shall be 28%, provided the said goods attract GST of 28%. IGST at the time of import of these goods would be available for discharging IGST on rental services. Thus, only the value added gets taxed, because IGST, whatever you are paying at the time of import, you will get the credit of that, and therefore only the differential amount will be taxed. Next, is GST leviable in following cases? See friends, let me just interrupt. The purpose of discussing these circulars are that we are supposed to revise, or we get a revision of all these circulars which we have already read. But these are the circulars which were issued long back in 2018. Now 5 years have lapsed. But please bear in mind, I am taking lesser time, or a less time of the session of a lesser time. Only reason is because we will not be in a position to remember whatever we are discussing. So therefore, it's a request that we are obviously discussing this, reading this threadbare, but you also have to read it once again so as to just recollect whatever has been discussed. And also, as I have already assured, that we'll be uploading these entire videos on YouTube very soon. So once it is uploaded, I'll be requesting that whenever you require to read these circulars, and the heading of the YouTube videos will be given, which will include whatever has been discussed in that particular session. So therefore, whenever you want to listen to it again, read it again, you can very well do that. But unless we read it 2-3 times, we'll not be able to grasp and understand this, the concept and the explanation which is given, or the clarification which is given. And at the same time, I'll repeat once again that these are the clarifications which are squarely applicable to the government authorities. We may not follow this. If we are not inclined, if we are not satisfied, we are not convinced with the clarifications given, we may not follow, rather we can also challenge if need be. So going to the next query, is GST leviable in following cases? 1. Hospitals hire senior doctors, consultants, technicians independently without any contract of such person with the patient and pay them consultancy charges without there being any employer-employee relationship. Will such consultancy charge be exempt from GST? Will revenue take a stand that they are providing services to hospitals and not to patients and hence must pay GST? Let's read the answer also one by one. Answer starts: healthcare services provided by a clinical establishment, an authorized medical practitioners or paramedics are exempt. The answer of the first question is services provided by senior doctors, consultants, technicians hired by the hospitals, whether employees or not, are healthcare services which are exempt. So therefore, no GST. Next is retention money. Hospitals charge the patient, say 10,000 rupees and pay to the consultants, technicians only 7,500 and keep the balance for providing ancillary services which include nursing care, infrastructure facilities, paramedic care, emergency services, checking of temperature, weight, body blood pressure, etc. Will GST be applicable on such money retained by the hospitals? That is 2,500 rupees. Healthcare services have been defined to mean any service by way of diagnosis or treatment or care for illness, injury, deformity, abnormality, or pregnancy in any recognized system of medicine in India. Therefore, hospitals also provide healthcare services. The entire amount charged by them from the patients, including the retention money and the fees or payments made to the doctors, etc., is towards the healthcare services provided by the hospitals, and therefore it is exempt. Next, food supplied to the patients. Healthcare services provided by the clinical establishments will include full food supplied to the patients, but such food may be prepared by the canteens run by the hospitals or may be outsourced by the hospitals for outdoor caterers. When outsourced, there should be no ambiguity that the suppliers shall charge tax as applicable and hospital will get no ITC. If hospitals have their own canteens and prepare their own food, then no ITC will be available on inputs, including capital goods. And in turn, if they supply food to the doctors and their staff, such supplies, even when not charged, may be subjected to GST. So the query is, even if it is not charged, then it will be subjected to GST. That is the question. Or when it is outsourced, then certainly there has to be the GST applicability. Let's see the answer. Food supplied to the inpatients are advised by the doctor nutritionist is a part of composite supply of healthcare and not separately taxable. Other supplies of food by a hospital to patients not admitted or their attendants or visitors are taxable. So therefore, if it is supplied to an inpatient, then it is always exempt because it will become a composite supply and therefore no tax. Otherwise, if it is supplied to a person who is not an inpatient, then in that case, yes, the tax will be applicable. Appropriate clarification may be issued regarding taxability of cost petroleum. As per the production sharing contract between the government and the oil exploration and production contractors, in case of a commercial discovery of petroleum, the contractors are entitled to recover from the sale proceeds all expenses incurred in exploration, development, production, and payment of royalty. Portion of the value of petroleum which the contractor is entitled to take in a year for recovery of these contracts cost is called cost petroleum. So what is this? There is a production sharing contract between the government and the oil exploration and production contractors. In case of a commercial discovery of petroleum, now the contractors they are entitled to recover from the sale proceeds all the expenses which are incurred in the exploration, development, production, and payment of royalty. And a portion of value of petroleum which the contractor is entitled to take in a year for recovery of these contract costs is called cost petroleum. The relationship of the oil exploration and production contractors with the government is not that of partners, but that of licensor or lessor and licensee and leasee in terms of petroleum and natural gas rules 1959. Having acquired the right to explore, exploit, and sell petroleum in lieu of royalty and a share in profit, petroleum contractors carry out the exploration and production of petroleum for themselves and not as a service to the government. So they are doing basically for their own self. Para 8.1 of the model production sharing contract states that subject to the provisions of the contract, the contractor shall have exclusive right to carry out petroleum operations to recover costs and expenses as provided in this contract. The oil exploration and production contractors conduct all petroleum operations at their sole risk, cost, and expense. Hence, cost petroleum is not a consideration for service to Government of India and therefore not taxable per se. However, cost petroleum may be an indication of the value of mining or exploration services provided by the operating member to the joint venture. In a situation where the operating member is found to be supplying service to the oil exploration and production joint venture. So, in short, what they are saying is that whatever is the production sharing contract being entered into between the government and the export oil exploration and the production contractors is a standalone contract, and therefore it is not a case that these contractors who are doing oil exploration and production services are providing any services to the government of India. They are doing it for themselves, and then they are under the cost petroleum or this concept, they are recovering the entire cost and retaining some of the portion for themselves. So therefore, that is cost petroleum, and it is very clearly written here that since it is being done on their own volition, and therefore it is not a service which is being provided by these contractors to the PSC contractors to the government of India, and therefore no GST. So this has been now clarified that GST will not be applicable in such transactions. So I think we have done enough, lot of surplus we have read. We will be discussing 34 onwards tomorrow, but not today, because remembering all these surplus is not easy, and therefore whatever time you have, please do read it again so that we get a good grip of the clarification which is given by the government. And with this, I'm thankful to each one of you, and we'll be meeting again tomorrow and read the balance surplus as much as we can, because in section 9 there are a lot of surplus which are to be covered. So once again, I'm thankful to each one of you. Thank you. Thank you very much.